Hi, how's it going? How y'all doing? Welcome to the 16th stock market Q&A session. Yesterday, Albert and I were debating what topic to talk about for this session because there are so many topics. There's always something happening these days. We could have talked about the American shutdown, which seems to be over, but once again, a stock market maxim is confirmed. Buy on the rumor and sell on the news. We could also talk about something else. Albert suggested this too, about that Germany might be shooting itself in the foot and is once again playing Russian roulette, hoping for a mild winter. And in the end, we're going to talk, although we can discuss all these topics during the Q&A, but mainly beyond all the questions you're already sending us, we're going to talk about what's happening with oil. We're in a situation where oil is in free fall, and I don't know if it'll get to the point like during COVID when it was cheaper to dump it in the sea and prices went negative, but we think that, well, it probably won't get that extreme, but honestly, it's turning into a pretty strange situation. So, Albert, how are you? How are you doing? You're on mute.
Oh, right. Sorry about that. I was saying I'm doing great, and I'm really looking forward to talking today because, as we always say, the news just doesn't stop, right? And at the end of the year, which seemed like it was going to be calm and everything would be smooth sailing, as they say, well, it's been just the opposite. So,
That's right. Honestly, it's been pretty chaotic. Well, before we get started, for those of you who are new to this channel, let me explain how things are going to be structured. It's really simple. We're going to start by asking Albert to talk to us about the main topic, how he sees the oil market, what could happen, how he's positioning himself, what he's discussing in his research. Let him tell us a bit about it. As you know, Albert runs WS Financial Research. If you haven't subscribed yet, make sure to subscribe. The first two pieces of news. First, hey, before you ask, there's absolutely nothing wrong with Miguel. Miguel's on a flight today. He'll be back with us again soon. We're going to miss him because we've already gotten used to having him with us. So today, Miguel, a shout out to you. I'm sure he's watching us. And the second important thing, as you know, Investing Pro is the sponsor of this show, this Q&A session, and specifically Investing, which is the platform you always see us using, which is the one Albert uses, shows the charts, shows the different financials he uses, the different tools. Well, it's Black Friday, and you can get up to 55% off if you buy it before November 25th. Important. With the code LWS and the link in the description or the QR code, you get an additional 15% off. That means it would be a total of 70% off. So anyone who wanted to use the tool, well, now you have no excuse. Albert, if you agree, I've done these introductions, and as it says here, hey, this is also a third reminder, as Nacho Jimenez says, come on, hit the like button. It doesn't cost anything. That's what I say. It's free. All right, let's get to the main topic. While all the questions are coming in, I'll say in advance, we're not going to be able to answer them all. Fortunately, the show has become a real success. I'd even say it now has more viewers than the Sunday Sangerine. And unfortunately, we won't be able to answer every question, but we'll be selecting some. As I was saying, what's going on with oil, Albert?
that's right, Antonio. Look, honestly, volatility is the name of the game, isn't it? As they say. Because for several months now, the headlines have been all about a big oil surplus, especially in the short term, that is, at the end of this year and the beginning of next year, which is partly true. I mean, obviously, the market fundamentals right now aren't very, very, very strong. In fact, we always use a lot of indicators. Actually, I'm going to pull them up now, okay? Because I think it'll be interesting to show this as we go, but we use a lot of signals from the physical market or let's say from the futures curve, prices and so on, which give us much more insight or information than just looking at the price alone, right? Without considering anything else. So, well, we've been going through a period, as I said, of considerable weakness, where the only upticks we've seen have been due to geopolitical headlines which aren't sustainable. In fact, we always say that the most reasonable thing to do when there's a headline like that is to treat it as fake. That is, not to believe it, not to take it into account. And like I said, now it seems that this weakness we've been talking about is finally starting to materialize. You can see it in the futures curve, you can see it in the projections, or let's say in the market balance outlooks and inventories, and the market is reacting to it. I don't know. Tell me if you're already seeing it.
Yes, we are seeing it on the monitors.
Okay, so look, the thing is that the futures curve and a futures curve in general can take several shapes, right? The first of these is what's known as backwardation, and the second is contango, right? Contango would be this one we see here, for example, with coking coal or with Newcastle coal, right? Which means that the futures price, as we've said many times, is higher than the current price. When this happens, what it means is that the market isn't particularly tight. And this is worth more because obviously the value of money over time increases, and also the storage cost, etc., of a raw material isn't zero. So if you want a future delivery, you're going to have to pay more than if you want it in the short term, right? With oil, right now, we're actually in the opposite situation, which is called backwardation. Backwardation means that the current price is higher than the future price. And what that tells you is that there's real tension in the market because people are willing to pay a premium for delivery today compared to what they'd pay for future delivery. This premium was around, it almost reached 70 or 80 cents, which is quite a lot. In this case, this curve we see here, we can see that everything is already compressed. This month doesn't count, okay? Because it's always done as front month, which means 2 months ahead. So if we look at February, even during yesterday, it actually flipped. This curve has shifted from the backwardation we're seeing here to contango. This has given us a lot of information that in reality, the price is tighter than we would expect. Not only that, but there are other signals like floating oil, which comes in large part from OPEC exports and also from sanctioned barrels that are now at sea, etc. And this is being noticed in the tankers, which are experiencing a tremendous bull market. And these are also negative for oil. So, in general, to sum up, I would say the balance is weak, the sentiment is bad, and although I have quite a bit of confidence in oil, let's say in the long term, because it makes sense since there isn't enough investment and there are no new discoveries, etc., in the short term, I think the negativity makes sense.
Albert, without giving an explanation, or better said, without naming any stocks, always respecting the subscribers, how would you encourage someone to play this situation? We can't use the word recommend. We already know the important disclaimer. Look, we should have said this at the beginning too. Important disclaimer. Everything we say is not a recommendation of any kind. You have to do your own analysis, and this is for educational purposes only. But how would you tell someone who wants to take a position in oil, whether bullish or bearish, what could be a good way to do it? How?
Well, look, in general, as you said, this isn't a recommendation, but a few tips that might be interesting for people to look into, etc., would be to first see which part of the value chain you want to be in, right? In the end, if someone wants to play the oil market, they can go with producers, right? Explorers and producers, or they can go into midstream, right? That would be, for example, refineries, or they could go into petrochemicals, distribution. There are a lot of variables, right? Adjacent services both offshore and onshore, etc. So, what I would say first is to see which part of the value chain you feel most comfortable with, know the most about, or want to play in. Not all of them have the same potential, but not all of them carry the same risk either. So once you've chosen, for example, let's say you want to play an upstream, which is the most typical, the exploration and production side. What I'd say is if we really expect a scenario of low prices or that prices might struggle in the short term, then the most interesting thing would probably be to look for companies that don't have balance sheet risk. Even though they obviously have operational leverage for future oil price increases, you want companies that won't suffer too much in a low price environment where there's no risk of possible bankruptcies, capital increases, and so on. Because what interests us is to be more defensive rather than offensive. So, those would be the first set of tips I'd suggest for starting to look at this sector.
All right. So, with that said, okay. Now, if you want, I see there are already some questions related to today. You're asking us a lot of things. Let's get started. I'm going to highlight some questions. Let's get started. All right. Let's stick to today's topic. Back 916. Albert, I don't know if you have anything else to add. He mentions that he saw on another show that you're pessimistic about the future of oil. I'd love for you to explain your thesis again. What news would be important to follow? Both positive and negative. Well, of course, if you ask the question at 5:15, you end up missing this whole part. I don't know, Albert, if you have anything else to comment on, if you want to add something.
Yes, yes. Well, look, what I'd say is that in the end, as we always say, investment theses, especially in cyclical industries and commodities in particular, are based on Antonio. I don't know if you can see it, but my screen is kind of flickering, showing up green for me.
No, it looks perfect.
Okay, well, it must just be on my end. All right, so in this case, there's a part that's about demand and another that's about supply. So, what I'd say is demand seems like it's going to keep going strong, and for quite a while, too. In fact, the IEA published a new article this week, a new analysis, let's say, where they said that not only do they expect growth to continue until 2050, but they also believe it will accelerate starting in 2030. So, that part will be covered. You need to keep an eye on that. When you mention positives and negatives, well, if there's a change in those outlooks, it could turn negative or even more positive. And then on the supply side, what's important is both the annual investment, because that will later translate into new, let's say, production, as well as discoveries, right? That's been the biggest problem in recent years. There have been few major discoveries capable of replacing the natural production, the natural decline that fields experience. So it's misleading in that regard, because I think geology is going to go against the narrative of a significant supply increase and so on. There haven't been any major discoveries, and on the other hand, people have been very pessimistic about demand, but now things are starting to make more sense, and it's becoming clear that the outlook is actually better than expected.
All right, let's continue. We're not leaving the topic of oil. Petrocal. As you can see, after today's reduction, the suspension of the dividend, and a drop of minus 33, what would today's price be to break even in such a case? Thank you.
Yes, we're going to start planning that too, Antonio.
Guys,
Tell me when it's ready.
it's visible.
That's a company that has done very well, okay? If we look back 10 years, it's not that interesting, is it? Because here you have COVID in the middle. But what I do find interesting is that all the oil companies had a massive surge between 2020 and 2022. Obviously, the peak was somewhere between April and June, depending on the oil company, right? Here you can see that in the case of Petrotal, it was in June, because that's when the price of oil reached, if you remember, over $100 per barrel. This was after the start of the military conflict in Europe, okay? So the problem is that after that, prices started to fall, dropping from over $100. Well, now they're hovering around 60, and that's being optimistic. So these companies, the oil ones, have suffered quite a bit. And if you look at the charts, you'll see that many have dropped sharply from their highs. That's not the case with Petrotal. In fact, again in 2024, with prices much lower, if you look, it was almost at the same level as in 2022 with a very high dividend in between, okay? And by very high, I mean more than 10%. So what's the problem it has? I mean, the asset. It's not bad in the sense that the break even prices, which the user was asking about, aren't that high. The dividend has been fantastic, and they've been able to maintain it without any problem. I don't think today's numbers are included here yet. I set it to 3 years to see the most recent data. But for example, we can look at June or March and see how this company was still able to generate positive results, even though the price in quarter two was lower than in quarter three, right? So it's true that what it generates now is much less, right? It's not given what it was in 2022. It's logical with the current price, but it was still able to generate positive cash flow. So, well, we can see it here, right? They were generating about 40 million in operating cash flow. With capex around 20, you had about 20 left and you paid 10 in dividends, so well, you could afford it. The thing is, today they announced that they're canceling it precisely because of these low oil prices, which don't allow them to be as confident about maintaining it. And what I don't like about Petrotal, or what I find a bit more concerning, is the jurisdiction. In the end, the problem is that this is in Peru. With the protests they've had, several blockades, and so on, they've had a lot of jurisdictional problems and opposition from the community. And as a result, they've suffered quite a bit. So the problem isn't the break even point, but rather the jurisdiction and some extraordinary investments they also have to make. So, well, they have an erosion problem that's costing them another 10 million per quarter. And with the low prices, well, that's why they decided to suspend it. But I think it's a company that it's well managed. I don't like the jurisdiction, and above all, it generates cash even at very low oil prices.
All right, if you don't mind, let's change the subject for a moment. Well, look, this one about Petro and all that, Dr. Powell already commented on it too. We're not going to change the subject. All right, let's get through all today's questions and then move on to another topic. Brian Gari, why the position in Pretobar if its reserves are mainly in the pre salt area, which is very expensive, and the reports always show declining reserves? At these prices, neither deep water nor ultra deep water is worth it.
Well, I don't know exactly where you're getting your data from. If you have it, send it to us or let us know what you're finding, because Petrobras's average lifting cost is in the low $30. Obviously, it's not the best asset in the world. You can't compete with it. For example, water from Saudi Aramco, but in general, they're quite low and they always replenish their reserves. Sure, it's through auctions, not auctions, but acquiring outside in some licenses, etc., which is reasonable. But overall, they have no issues with reserve replacement or anything like that. Production is at its peak, it's going to keep growing, and they're executing well. If you share the data you're referring to, we can discuss it because maybe you're talking about another area or specifically about these fields, etc. And we can see it, but the production costs are quite cheap, with a lifting cost of around 30. And they also replenish reserves.
Well, we've done it two for one because Jai also asked us about Petrobras. Let's wrap up today's section. We're gathering all of them together. Albert, do you think the dividend from is Petrobras's dividend at any risk?
None, because it's 45% of the free cash flow. So it's variable. Okay. That allows you to adjust it. If you mean whether they'll pay the same as this quarter or the same amount, then yes, there is a risk. Because, of course, the risk is that prices might change or they could have a production issue, etc. But beyond that, no, right? They have a very low lifting cost. Obviously, if oil drops to 40, well, then we'd be talking about something else, right? But for now, no. There's really no risk. I mean, it could be reduced, yes, but nothing more than that.
All right, now we're going to move on to another round of questions for today. Today, I'm trying to segment them and organize them by topic, and we're going to start with the gold section. But before we get into the gold section, let me just say to all of you, thank you. If you're interested in gold, if I were you and you're not already subscribed to the Locos to Wall Street newsletter, you should definitely sign up because this week we're sending out some really interesting stuff about gold. I can't say much more than that. If anyone isn't on the Locos to Wall Street newsletter list, sign up using the QR code I'm sharing right now. Besides receiving, every Sunday you'll get the newsletters sent by this guy, Albert Milan, with a really great weekly summary. Like I was saying, this week there are some things for everyone who likes gold and something else I won't mention, so you can stay really well informed. I'll just leave it at that. Sign up, and tomorrow you'll get the first email. Let me know what you think, Simon. All right, let's get going. Before I start rambling, Albert, Marcelo, question. How do you see gold at the end of 2026? Is it realistic for it to reach 7,000? Uh,
Look, I'm very bullish on gold. I think all the tailwinds it has, in the end, we've said it many times, geopolitical issues, countries diversifying their reserves, especially those not closely aligned with the United States, currency devaluation, and so on, all play in its favor. The depletion of many deposits and the rising cost of the ones that still exist, and so on, all of that works in its favor. But for it to almost double, right? Well, for it to go up 70% by the end of 2026, that's where I'm not so sure, you know? I'm bullish, but I don't know if such a massive move in such a short time is likely, especially in an asset with the market cap, the attention, and everything else that gold has. Is it really reasonable, especially after an 80% run this year, almost doubling, right? Well, or, 50% if you just look at year to date or so, but you get what I mean. So I see it. Maybe it's a bit excessive, but that doesn't mean I'm not bullish. I just don't think we're going to see such an explosive move. Hopefully we do.
Well, more questions about gold, because today a company you've talked a lot about related to gold, Dynacor, has reported earnings. Here, wait a second. I'm looking for it. I haven't asked you several questions, so I'm putting them all together regarding Dynacor. Here it is. Sorry. Jose de Parte. Hello, good afternoon. Could you comment on Dynacor's CFAA? From the CFO of Dynacor, they have come out very negative due to working capital. What is the reason for this?
Look, we're going to see it now. Wait and see if I can actually find it here, what I want to show you. I'm going to publish it, and let's look at everything I think we should pay attention to in this report. And let's see what you think, or if you see it the same way. Let's see, wait, let me make sure it's opened. Management discussion and analysis. Okay, Antonio, let me know when it's showing as well.
It's showing.
Okay, this is what they post along with the results, okay? This is what I recommend you look at, because this is where we have the most information, which is the management discussion and analysis document, where they talk to us about the results and go into much more detail. So the first thing we see is the volume they process. Don't worry, we'll look at this in charts in a moment, the ounces they produce. These two are related, but it's not obvious. A record sales figure of 100 million compared to Q3 of 2024, that's a pretty significant increase, right? From 76 to 100, the gross margin, actually, it's the gross profit, right? Because they give it to us in monetary terms. It's true that they also give us the percentage later, but anyway, the EBITDA, even though they say it's a record, it has only increased by $100,000 compared to last year, right? So with 25 million more in sales, you've only increased EBITDA by $100,000. We'll see why in a moment. Well, recurring expenses and net profit, right? Which actually drops compared to last year. And an operating cash flow, which I suppose is what our colleague was also referring to, of 6.6 million, similar to last year. So if you just look at this, what you'd say is, hey, these don't seem very good, because if you increase sales by that much and it doesn't translate into anything, well, that's not great, right? For the company. And now I'm going to tell you about the things that stand out to me, or that I think we should pay attention to, okay? The first thing they share with us is the price of gold, since what they do is turn ore into bullion, right? And into pellets and sell it. Obviously, the price of gold is going to be very relevant, because that's the price at which you'll sell your products. The exchange rate here, without much surprise, it's true that the dollar to sol has dropped a bit, but nothing serious either. We see that it's quite stable for what we would expect for the sol. In fact, the Canadian dollar has actually performed worse than the Peruvian sol. The processed tons, this is starting to become important because it will affect the volumes. So we see that in the first quarter, they were very much in line with 2024. And yet, as we can see below, production was much lower than in 2024, right? With the same level of tons, you produce much less gold. Why is that? Because the grade of the processed ore and the recovery of that ore were much lower, right? So that's what I was saying. Even if the price of gold goes up, if your volume drops, it doesn't really add up, right? It doesn't do you much good. In the second quarter, there were some production issues because in Peru, there were some curfews, mining related, and so on. It processed fewer tons per day and produced fewer ounces. Here, they didn't have as much of a problem with ore grade, but they did have issues with recovery at the plant. They've already fixed this, and this year, notice that they've processed a lot fewer tons. That was because during July, there were some road blockades and they didn't receive any ore. If it hadn't been for 44,000. So already in line with Q3 from 2 years ago, because last year they produced above capacity and they've produced almost the same number of ounces as last year, right? The ore grade has recovered now and the plant's processing capacity has improved, okay? So this is what I see as very positive now, meaning the issues we had with ore grade and recovery have been resolved, okay? In this quarter, if we had processed the same number of ounces, we would have gotten much more out of it. That's something very important to look at. Then we get here to the profit and sales part we were talking about, okay? The gross operating margin increases. In other words, your gross profit goes up, which makes sense, but your margin decreases. Why is that? This is more or less logical, right? In the end, imagine that the margin per ounce sold increases, but of course, $400 now versus, well, we'll see exactly how much further down. Profit now, or margin, versus $300 before. The absolute amount has increased, but compared to 4,000 now and 3,000 before, it drops in relative terms, right? So as a percentage, it goes down, but that doesn't mean you're less profitable. The problem is that you don't have such a big operating leverage because your costs aren't fixed. Instead, we see that most of the costs are variable, right? And they depend on the price of gold. So that's what keeps you from having as much leverage as, for example, a mining company. But we already knew that. The big jump that's caused us to have much less profit this year is due to administrative and general costs. Why is this happening? Well, they've acquired a plant in Ecuador and they're also launching a pilot plant in Senegal. So now you have staff in those areas working who, for the moment, aren't producing anything for you. So your costs and salaries go up a lot, but at the same time, this isn't resulting in any sales or contributions. And that's what's messing you up, right? Here we can see the big jump. It's happening in general and administrative expenses. If we didn't have that, this would have been much higher. We'd see an extra 1.5 million here. If that were the case, net profit would have been almost 9.5 compared to last year. This is the line item that's causing this drop. What else are we going to look at here? Here, we saw what I was telling you about the selling price and the purchase price, something that margin per ounce increases, but as a percentage, it doesn't go up enough to really improve your gross margin, right? You don't get that interesting operating leverage. And regarding cash flows, which I think was the other thing they mentioned to us, well, I really like this chart, because it shows us how much I produced this year, how much I had last year, the change, and why it happened, right? They explain all this about the volume I was telling you about the process capacity, etc. Okay, and here now we have what it tells us. Changes in working capital, which is what I was talking about here. Why am I not worried? Because the drop in cash generation is due to a change in working capital. Why does it happen? Because you have to understand how the business works. That's why we always tell you that just building a model isn't enough. What you really need to do is understand where each case comes from and why it happens. In this case, how does this company operate? Well, a miner comes in with his ore, his rock, and what they do is pay him for it. So you're paying for ore now that's much more expensive than it was last year. And when do you sell that? Well, the process between analyzing it, processing it, packaging it, shipping it, and so on means you have a really bad working capital cycle because there are companies that sell first and then pay the supplier. In this case, it's the other way around. You pay first, and then maybe 20 days later, or whenever it's your turn in the cycle, sometime during the month, whenever it happens, you get paid. So when the price of gold has doubled, your working capital consumption also doubles. And especially when the change happens in the short term and prices go up. Because like I said, you pay up front, you get the material, and then you process it and sell it and so on. So if you've built up a bit of inventory and on top of that, prices have gone up, then you have the working capital problems we're seeing here. But this isn't a recurring issue, which is why you have to separate it out. And another positive thing that I liked is that they've bought back shares. This year, they've bought back 1% of the company. Since they first had to issue shares to buy Ecuador, obviously this ends up being negative, right? In the end, if you issue for 20 million and buy back for 1.7, well, you can imagine that's not positive, but they've started buying back shares, and that's definitely starting to be a good sign. So I see the results as very good. In fact, the stock went up, but then it got caught up in the overall market sentiment, which we can also discuss later, reasons, ideas, and so on. But honestly, I thought they were quite good and that they addressed some of the problems we were seeing.
We're not getting out of gold. We're not getting out of Dynacor, Raul says. How is it possible that a growing company is trading at just a little over 2 times price to book? At least I haven't seen anything like it. They don't have debt because they're not going crazy buying back shares.
But who are you talking about?
Dynacor.
Ah, okay. I've never seen anything like it either. They do have some problems, obviously, the jurisdiction, right? In the end, being in Peru isn't ideal. Now they're entering Ecuador and Senegal, and you can imagine these aren't tier 1 jurisdictions. They've had some operational issues, management isn't the best, they don't communicate as they should, and so on. But the business itself is quite attractive, and above all, we really like the valuation. So I've never seen anything like it either. It doesn't have leverage, as we've seen, and its operational leverage to gold is very, very high. In fact, the margin percentage goes down, although it obviously increases in absolute terms, right? But I really like it. Yes, if they manage to execute the expansion well, it's very interesting. And even if they don't, it's not expensive just with what they already have.
Let's wrap up with gold with a classic, Barrick Gold. How do you see Barrick Gold after the CEO, Miguel Mendez, left?
If you want to comment, Antonio, I'm not sure if you follow it more closely. No, now.
I don't follow Barrick Gold. It's impossible for someone to say they don't know Barrick Gold, but I know it's the typical company you'd invest in if you just wanted to own a stock and get exposure to the price of gold beyond just an ETF.
Yeah, I don't like it much because they have some problems. What are they? They have a hard time replenishing reserves and have to buy them. And buy now with higher prices carries a certain risk. And then the problem when you have so many operations is that there's always something that's not working. Your costs go up, you run into problems, etc. It's not the same as managing a single asset. On the other hand, you get diversification, right? You're probably never going to take a minus 50 either just because one operation went wrong. So, like you said, Antonio, it's kind of like playing an ETF, right? Because in the end, you have diversification, etc. And you know that if money comes into the gold market, it's going to go into these companies, right? In Anico, in Barrick, etc. But it's not my preferred option.
Okay, let's change tack completely. Juan Manuel Cortez. Hi, could you explain the drop in ASTs? Are there any news expected soon that can help the stock recover? There is news coming out. That's the thing.
Yes, and what we really need now are the launches, which seem to be lined up for next month. But the problem with these companies, and I think I saw another question about ASPI, which we'll get to and discuss in detail. But the problem with this company is exactly that in the end, thank you. For now, it doesn't produce anything, okay? Well, it doesn't produce anything. It doesn't generate significant revenue. So is the thesis being de-risked even though it seems like nothing is happening? Yes. Why? Because it's signing new commercial agreements, it's building more satellites, and so on. So even the government contracts that are starting to come in now and in greater numbers are very positive. But when you don't have any revenue or, let's say, established operations, the problem is that you depend entirely on the news flow. And now that's dried up quite a bit because the company hasn't executed, just like they told us. This is typical. In the end, people always promise more than they deliver, right? And on top of that, the US government shutdown hasn't helped them because it seems they had some deals closed or about to close that needed government confirmation. So when it was shut down, they just couldn't do it. But it's not like anything happened to it, it's just dropped from 100 to 60. Here and today, I also shared it, one of the most active in our community, right? Mr. Timbits, who, if you remember, we were talking about, several of us, right? Myself included. Well, we took the opportunity to sell calls when it had that crazy spike. Why? Because it's smart to take advantage of the volatility and not just wait around. Well, we always think when it's at 100 that it's most likely going to 500, right? All of a sudden, when it's already tripled in a short time. The reality is that's not the case, especially with the operational issues it might have. So, not taking advantage of this would have been pretty unreasonable. And well, that's how it turned out too. Now, Lacola was buying back today. And that's it. So I don't see anything to worry about, but you do have to keep in mind what I said. Until we actually start seeing real news about launches being executed, well, we'll just have to wait. 440.
People live on a Thursday, almost 10 at night, across all platforms Twitter, YouTube, Twitch. So thank y'all so much. Y'all already know I've put the QR code in the corner, and you also have the link in the video description to get up to 70% off for Black Friday on investing with the code LWS. You get 55%, which is what investing is offering right now, plus an additional 15% with our code. Albert, you mentioned this too. What's going on with iron? What's causing the drop these past few days?
I'm leaving this one to you, Antonia, and show him with options and everything.
All right, let me tell you what's going on with iron. I talked about iron in the last Sanhedrin about their results. And look, it's a thing. Right now, the whole AI narrative is kind of falling apart a bit, okay? Why? Because now there are a lot of voices saying, hey, the numbers just don't add up for everything. And it's clear, I think we all agree that the future is going to be artificial intelligence. And there are a lot of companies, a lot of players trying to get a piece of that pie, but not everyone's going to make it, even if artificial intelligence does end up being a future. In the case of Iron, as I mentioned in the Sandrin, what do I think happened? I think it was a matter of expectations. The stock overheated a lot after the deal with Microsoft, where Microsoft bought part of their installed energy, 200 megawatts, but the company actually has much more. They expected that this would be the starting gun, and in my opinion, this is just my opinion, they thought it would be like what happens with commodities, the famous reflexivity, where people assume that all the other big companies would also want to sign deals with Iron. In fact, there were unofficial sources and so on, kind of like what happens in the community. Now I've lost my train of thought. The community, Reddit, that's the word I couldn't think of. They were making some real, well, I won't say the obscenity, right? The next one is going to be Amazon and Meta. And during the earnings report, they're going to announce five. The earnings report was very flat. And in fact, the company had some really good metrics and others that weren't so great. Like, for example, revenue didn't meet expectations, but Interpurchase did meet expectations. So, in the end, for me, it's all turning into a game of expectations. You look at the stock price, thank you. It grew a lot. When it signed the agreement with Microsoft, it went up, and then it started to drop a bit because people thought they were going to sign deals with other companies. That said, what's the situation with Aaron? In my opinion, after having analyzed it a bit, I'm sure many of you are more knowledgeable than I am. Obviously, they have a pipeline to build data centers. What they're building are, let's say, for example, Microsoft, Meta, and so on. Amazon, etc. They all need energy for their artificial intelligence, right? So what do? Instead of building it themselves, they Ray, how much energy can you give me? All right, I'll take it. And Iron is building all that energy to sell it, energy that's already produced. You get what I mean, right? So their virtual servers can be there, running AI processes and so on. What happens then? They have to sell it. But Iron keeps moving forward with their plans. Microsoft had to pay 20% of the contract up front so Iron could keep investing that capex. And it's clear they're going to need either debt, a capital increase, or to sign agreements asking for money in advance. So, well, it's a complicated situation as always. Complicated. So, these days, about Marta's presentation, that it wasn't bad. Well, not really. I also don't think it was particularly good either. So, anyway, having said all that, let's keep going. Warren Cito, look, he says, this is a really good question. I think it would be for Edgar. But anyway, does anyone know or follow Duolingo or any other kind of business like that? What do y'all think? AI will take over the business. Good job. What do you think, Albert?
Well, look, I obviously think you should also ask Edgar in the Sanhedrin, right? Because I'm sure he also has his own well formed opinion. In Duolingo's case, it's interesting because I think the narratives that have come out aren't really gonna kill the company. I mean, in the end, what is it that people are saying? Well, first of all, no one is going to want to pay for, because of this, no one will want to learn languages since there will be new services like simultaneous translators, etc., that will save you from having to do it yourself. And on top of that, as Gardoncito says here, AI is going to kill it because you won't need translators or to know anything. You just put it in and that's it. But that's not the reality. The number of users is at an all-time high, etc., and we need to understand why. And the thing is, people generally don't learn a language just because. It's not just because they don't have another translation option or because of the hassle of having to wear headphones and all that, which I won't even get into. It's that a lot of people learn a language as a hobby because they like keeping their mind busy, to be able to speak, because they like how it sounds, to understand songs, to travel and be able to speak themselves, to understand literature from that country, and so on. So the reasons for learning are many and varied, and they don't just fit into the narrative of utility. So both the DAOs and their margins, paid subscriptions and so on Duolingo are at all-time highs. And I've heard the CEO talk several times about these negative cases and so on. And I pretty much agree with him that it's a narrative that doesn't really make much sense. From a utilitarian point of view, if you're a translator, well, I'm sorry to say it, but yeah, you're screwed, honestly. you're probably going to lose your job sooner rather than later, except for some very specific things in high literature that require something more and so on. But in general, you're going to lose your job. But that doesn't mean people want to stop learning languages.
Albert, I actually think a bit differently here. I do think that look, wanting to learn languages is one thing, but I really believe that if AirPods work well and can translate for you in real time and all that, the whole translation thing is going to drop off a lot. I think it's not such a I'm not going to say it's such an apocalyptic scenario. I don't want to say apocalyptic because it's none. It's actually positive, not so futuristic. The idea that we might be close to eliminating the language barrier in the world, meaning that you could talk to someone almost in real time translation with some gadget, I think that's more.
Within reach than we think. Yes, in terms of functionality, I agree. I mean, that's already here. And in fact, for years now, there have been professional conferences and everything. This already exists. And it's going to reach, like you said, the broader market. What I don't see so clearly is that this will mean people won't want to learn, say, Italian or French anymore. Well, we'll see. In the end, it's like what happened with Adobe, right? There's PayPal too, the opportunity or the risk. Meaning, is this really going to kill it, that it no longer makes sense and its terminal value is zero and soon enough, or not?
Look, in this sense, what you're saying, Tacone says, I think it's along these lines. My mom uses Duolingo more as a game than as a learning app. She likes to accept.
Exactly. Perfect. You see? Yes.
Well, Albert, you can't leave without talking about this one. Y'all can't leave today without talking about Pluxee and Edenred. Hey, 520 users. That's wild.
Without revealing anything either, Antonio.
Yeah, that's true.
No, not about Plexi. I mean about this as well, which Martine also brings up. It's not a huge question, but I want to answer it. He asks us, hey, what about the new investment theses, right? The ones that are being added to the model portfolio, because, for example, recently Warner Bros. Was sold from the model portfolio, others were added, and so on, right? There will be theses, yes. Don't worry, we do them. I mean, our idea is to periodically cover everything in the model portfolio and more, right? You can see that we're covering restaurant services, Georgia Capital's insurance. So we're going to cover many more industries and so on. But everything in the model portfolio will be included. The thing is, they don't all come out at once. That is, obviously, we are periodically publishing and covering everything. And we started from zero, obviously, in September 2022, right? We created the model portfolio and didn't have any theses, and they've been added month by month, month by month. So you're going to have them, no problem. And now we're back. Sorry.
They should do a quarter without results. It's just that Albert also has to cover. Thank you. All the results of all the companies in the model portfolio. That's the thing.
Yes, but anyway, we do it gladly. Obviously, we love it. But the reality is that it takes up a lot of time, right? And now let's move on to Edenred and Plaxi. Sorry. So look, I'm going to pull up Investing Pro again, okay? Because I think it's interesting. And these are companies whose narrative has also changed a lot, right? Because, well, if we first look at the price, which is always a bit of an approximation, this is a company that had a compounder chart, right? Let's say back in 2015, oh, sorry, here at 14, and so on. Obviously, there are bumps along the way, right? COVID, the 2022 period with interest rate hikes, but it keeps going, going, going. And by 2023, it reaches almost 60 euros. Since then, it's been drop after drop after drop. And even now, it was at 20, but there was a jump after their earnings report. And now it's back to around 19 and change, right? So, what has happened with this company? Profits have dropped, right? Because, I mean, of course, if we look at that chart, we'd say the fundamentals must have really deteriorated, right? Well, here you can see the revenue. If we look at it from a distance, it's the same. Gross profit, net profit, maybe there's a small dip, right? But overall, you can see the trend, the EPS. So, it's not really a fundamentals issue. So, when the price drops, but the fundamentals haven't, what's happened is the multiple has contracted. It seems pretty obvious, kind of a no brainer, but it's important to point it out. So, this is a company that was trading at 25. Plag is the same thing, okay? What happens is that since it has less history, I used Edenred because it's a spinoff from Sodexo and has less historical data, but anyway, it's the same thing. This was trading at 25 to 30 times earnings, and now it's trading at 7 to 8 times. In between, what changed? In this case, it's not an AI narrative, but rather a narrative about regulatory risks, some of which have actually materialized, okay? In the end, what they do is charge companies and also charge restaurants, right? From both sides, plus other benefits. But focusing on the restaurants and the fee they charge, well, now it's starting to be regulated, as well as the time frame in which they have to pay the restaurants, etc. So they've had problems in 3 regions, mainly in France, Italy, and now in Brazil. Brazil is important because even if it doesn't seem like it, it's one of the main countries or pioneers in adopting this kind of employee benefits. It has a program called PAD, which I think has been around since the 70s, right? It's one of the leading countries and also has a very large workforce. So any changes there have a big impact on these companies, especially Pluxee, which isn't as diversified, but also on Edenred. And over there, it seemed like they wanted to overhaul the whole program, even talked about getting rid of it entirely. And these companies took a big hit, right? In the end, obviously, it wasn't eliminated. But it does seem that a presidential decree was signed reducing their take rate from 7% to 3.5%, shortening their payment period, and so on. And that's going to hurt them a lot. In fact, NRED had given growth guidance for the following year of 4 to 6%, and now they're talking about a decline of around 8%, okay? So that difference is Brazil. I mean, it's really significant. Does this mean it breaks the long term thesis? For me, no. In fact, they've kept the guidance for 2027 and 2028 unchanged, right? As for growth, obviously it's not good. It's a negative adjustment to the fundamentals, but there's also a positive side, which is that all this uncertainty that existed, if this finally ends up happening, because they're going to appeal and so on. But anyway, if it does materialize, then it's already happened. In other words, the uncertainty is gone. You know what you're dealing with. And from here on out, it's a new baseline to operate from, right? But anyway, that's what hit them this week, which is when these details came to light.
Here's another one from Brian Gallery, and he comments about what happened with Michael Burry. Well, let's see. As you know, Michael Burry announced today that he's closing his fund. Okay. So he returns the money to the investors and shuts it down. I like a theory, just to add a bit of gossip and spice, that Michael Burry, well, there's a theory going around on Twitter, which I read from Hector Chamizo. Thanks to him. We send him our regards from here. It makes sense, right? Beyond the conspiracy theory, which says that Michael Burry is going to make an announcement on November 25th, and he's very short on overvalued stocks, very short on AI, short on Nvidia, short on Palantir. He says everything is in a bubble. And right before the announcement, he gives the investors their money back. And what if he's thinking about doing another big short? But this time he says, look, I'm done with all that. You remember the movie with everyone constantly bothering him? I'll do it with my own money since I have plenty. And I think this guy, even if he lost everything on that hypothetical possible bet, he has enough to live 7 lives. And I think he wants to go down in history as the guy who does it a second time. So, hey, you have to admit, at least it's kind of funny. If that were the case, which I'm not saying it is. Next, guys, what do you think about Meta Constellation Software? Thank you very much for your opinion. The case of Meta is harder to pin down on, right? In the end, it's the Magnificent Seven. And in Meta's case, my opinion is that it's one of those companies that can afford to make a big bet on AI because it still has a business that's a real cash cow. The case of Constellation Software is even more of a textbook example, right? It's a classic company that people spent half a fin to it complaining about because it was always expensive, and now it's dropping and nobody's buying it, right? I don't know how you see it, Alfred.
Well, it's the same narrative here too, isn't it? That in the end, this vertical niche software they used to buy, well, now with AI, it's going to become a bit obsolete and so on. So, well, it's kind of the same narrative. Plus, as you all know, the CEO also stepped down. I think it was due to health issues, right? In this case, but with Mark Leonard. So, well, it's kind of the same thing that's going to happen with Berkshire the day that, unfortunately, Warren Buffett is no longer around, right? Just this week, we've also had him publish his last letter, and so on. But the day he's really gone, that day Berkshire will probably drop by 10% or something like that. Is there a financial or fundamental reason for that? No, but sometimes there's also a premium built in because of the management. In this case, since it's also publicly traded.
Walter Clavijo asks, what do you think about No Man's Food? Do you follow it over?
No,
No. Jorge Rodriguez also asked us if you know Farland Partners. What do you think? I don't know it.
me neither. It always makes me laugh because they know every company, and some of them are really interesting. We're always learning.
Radikar Teka, the best name on YouTube. How do you see ASPI's situation with the latest news that's come to life? What outlook do you see for it a year from now?
Do you want me to go out on a limb a bit, Tanya, or what?
Let's see. I just came from a class in the training we do on raw materials, and Danny Castro was actually talking about a situation that could happen with ASP. Basically, if their technology succeeds, uranium mining companies could be in trouble in 10 years. ASP has very advanced technology for uranium enrichment, and not just enrichment, they can make better use of the uranium that's available, enriching it further, not just more efficiently, but also enriching uranium that's already been extracted using a water based technology. Basically, enriching uranium almost by reprocessing uranium waste. In other words, their technology is impressive. So, as always with these things, if their technology succeeds, we're looking at a company whose market cap I don't think we can even imagine in a few years. If it doesn't succeed, well, that's my opinion. Obviously, there are people, and I mentioned this in the training, and I'll say it here publicly, who want to know about ASPI and the reset. It's talked about a lot, and it's not just us talking about it, since we might have much less knowledge about the company. In fact, today, users like Proletario, Silvermoon, and XGS, all the credit goes to them because every time they talk, it's like a masterclass, and they talk about it almost every day. Anyone who wants to follow it, hey, on Twitter, Borgia. Same thing, a real expert on the company. The news that came out today isn't about the famous spinoff of their QLE division, right? But rather, correct me if I'm wrong, Albert, it's more like a statement of intent or the beginning of something. But that doesn't mean Jan is going to come out and the terms are already set, right?
Exactly. This was simply the preliminary step, let's say, to make way for the spinoff. The eventual spinoff? For me, the problem with ASPI is that the management is very shady, right? Shady, the English word meaning they're not transparent, right? They're pretty sketchy because, well, they say they have this technology. And from what I've seen and how I validated it, I think they do have it and it works. The problem is that they've sent out commercial samples, but there hasn't been any published response confirming whether these are actually valid or meet the required specifications. If this later translates into a commercial agreement, that is, they haven't managed to execute anything operational from what they've said, their communication is terrible. They focused on diversifying the business horizontally to integrate the entire uranium cycle. I think that might make sense, but when the market is waiting for specific news and you don't deliver on that, and it seems like you're just shifting focus to other things, well, people don't like it. Then, regarding the spin-off part, with the SKDB part, they've also made moves where they're going to benefit a lot at the expense of, let's say, the shareholders, right? Not being able to participate in the same way, etc., which in itself doesn't mean anything bad, right? It doesn't mean that this company isn't worth anything, etc., but it does give the impression that they're not the Londons, the ones running the show, right? And for me, that's weighing on things, but I'd say today's news is positive. The problem is that the uranium sector has taken a huge hit, a massive drop. And this is being dragged down by several factors.
Yeah, and I think with ASPI, it's a combination of things. Is the uranium sector fallen? Is ASPI fallen? Is the tech sector fallen? Is ASPI fallen? On Friday, we got some news where, well, the Trump family is also getting involved in the group with investments. Just putting that out there, okay? But it's a stock with a lot of risk. Mark Gracia is asking if you have any book recommendations about commodities. Thanks. Look, there really aren't any books specifically about commodities. In fact, I always tell the teachers in our training program that we should write a book. Since Albert also teaches a lot of classes and writes a lot of articles, we really should write a book. There are some books that touch on the subject. For example, probably If you're interested in commodities, you might like the book The World for Sale by Javier Blas. Pretty entertaining, but don't expect it to be a book that teaches you how to invest in commodities. I'm telling you, in Spanish, there definitely isn't one like that. In English, there are a few, some manuals like exploration meaning or something like that, right? It's called that, Albert. I'm not sure if I got the name right.
No, I don't know it.
There are a few manuals. In Spanish, there's nothing at all. Nothing. Guaranteed. I don't know, Albert. Do you have any recommendations?
The one about capital returns, like you mentioned, is general, but beyond that, nothing specific. I really like reading Backlash 1000, but those are much more technical.
Then Byron also asks us about Pooch. Are you planning to take a position in that company?
Well, we've talked about it a lot, but up to the company. We've kept it on the watch list, etc. So obviously, you're not going to reveal if it's going into the model portfolio or not, etc. But yes, we are keeping track of it. I find it very interesting, and we've discussed it in several consulting sessions as well.
Then Raul Fu 2GP asks us if we follow FRP holdings. Merido has been talking about it for 4 years and has had it in the toe straps for a long time.
I only follow it because of him. I mean, I can't add anything more to what he said, but I follow it because of him. I try to watch everything he does. The last conference he gave was also very interesting. I haven't seen it yet.
The last conference by Amerido. Highly recommended.
Yeah. Dude, I really like the style because it's someone who approaches investing from an intellectual point of view, which isn't that common. In the end, it's a person. I don't know her personally, but from the impression I get, that's what she is. Very curious, intellectually, she likes to learn, research, and so on. So the opinion she gives comes from that. I value it. I give it the weight it deserves because I know it's well thought out. We might agree or not, but the fundamentals are solid and you'll learn a ton.
584 people live. That's wild. Hey, take advantage and hit the like button, man. It really helps us out a lot. Walter, you need to watch the show from the beginning because Albert talked quite a bit about Petrobras there. We're about to wrap up the Q&A. Albert, any opportunities in Chile with the upcoming elections? Junior Pacheco.
Well, there are quite a few things I like in Chile. I'll share them. Thanks. The ones that are, let's say, more typical, right? Because they could be interesting. The first one we've mentioned many times is Amerigo, okay? Amerigo Resources, because as you know, they operate the El Teniente mine. Well, the regulations for the El Teniente mine in Chile, etc. Now, this is just general advice because we don't make stock recommendations, but we do talk about macro ideas. And when you want to play or bet on an economy, well, a direct way to do it, the most direct way, in fact, is probably through banking, right? So, for example, there's Banco Itaú in Chile, which is listed there and is interesting. Obviously, it's already gone up a lot. This year, it's up 72%, and that's for a reason, right? So, when you look at things, you also have to keep in mind that the news you see or want to act on usually comes out in the press in the last 2 weeks before it happens. And by then, it's often already priced in. That's why it's important to do forward looking analysis and research ahead of time, right? But there are opportunities, and Chile seems like it could be in for an interesting change.
All right, and now let's go to the last one from Juanjo Martinez, who actually sent it in at 620. He says, given the number of companies involved in and affected by AI, I'd like to know if you recommend any research or books to really dive deeper into the sector. Actually, watching the Marito conference covers this topic quite a bit, doesn't it?
Yes, because what he does is take us through the history of AI. It seems like it's something that just popped up 3 years ago, but the reality is that's not the case. This has been developing for a long time, with many applications already in use for quite a while, and so on. We mostly use LLMs, but the way they're developed may or may not lead to general intelligence, or artificial general intelligence, not what is commonly known as AI. And his thesis is that they won't. I recommend you watch it to find out why.
Beyond that, how do you keep yourself informed about AI? Is it by reading certain publications or something specific?
What I do, simply, is I have a list, which is actually pretty interesting. I get a lot of press summary newsletters every day, and you can check out the Wall Street Journal, Reuters, and so on, which always have articles to dig into. But for me, what's even more efficient than these news sources is also following the right people. So when I'm interested in a new topic, and in this case, AI, it's already part of my Twitter feed and so on. What I do is really dive into it because people there share a lot of articles and so on. And then because of my background, I'm a mathematician. I actually have quite a few friends who work in this field, right? In fact, some of them are a deep mind, with Demis Hassabis, the whole Google side of things, and so on. I was involved, if you've seen the AlphaGo documentary, a friend of mine was actually part of that. So when all this started to blow up, I talked a lot with them, set up calls and so on to get up to speed on the latest and more technical stuff, in line with what Emerito was talking about at the conference.
Well, that's fantastic. We'll wrap up with this comment, given the thanks from Byron Gowrie. Thank you so much for everything. You guys should make a video one day about how you manage to stay informed, work, write newsletters, and do everything you do. All the effort you put in is incredible. Well, I always make the same joke. Don't ask my wife, because then what more could I want? With her answer, you could probably imagine it. But yes, well, it's worth it.
How much does a divorce cost, Antonio?
Don't ask her. It's better not to. But as I was saying, beyond a joke, all that effort is worth it to bring together on a Thursday at 10:20 at night in winter with rain across half of Spain. 571 people live. So y'all are amazing. We're signing off. Remember the news, Up to 70% off with our code on Investing Pro. And on Sunday, we've got an awesome Sanhedrin waiting for us. Edgar is coming with the results from an old acquaintance that we don't know if it's presenting an opportunity. Disney. And we got another little surprise. I'll leave it at that. Thank y'all so much. Have a great end of the week. And we'll see you on Sunday. Albert, thank you so much.